Hey, good morning. It's Dr. Bob Flower here with your Monday, September 14th Master Pattern Report. Well, sorry I missed you last week. Out for some minor surgery. Things are getting back to normal. But for the week before, our September 4th call broke 100 points on the 3rd and the 4th. Actually, it was on the call was made for the 4th, but as you know, we have that day before, day after scenario, and then the following trading day, which was I think on the 7th or the 8th. So we had almost a close to a 300-point rise within those 3 days. It's not typically what our call is about. Usually, we predict on our hit days somewhere around 150 points. The market has changed. The character of the market has changed. And I'm going to talk to you a little bit about that. So that's a cum si cum sa hit. However, silver broke out immediately after our call, and it went from 1469 on I think it was on the 2nd to 1670. All within a week. Real nice move. If you had it, you made a couple of bucks. Oil continued in the range in which we had defined of between $65 and $75. And the yen has strengthened again, making some real strong move here. And the dollar has weakened and is making some has made some very poor downward moves. So now, what do we have this week? Well, this week we're looking at the S&P for the 18th and the 24th. We're looking at some moves on that day. Silver, we're looking at tomorrow for a move there. This is a little confusing. I'm not ready to say that whether this is an up or a down, but I think it's going to be up to around $17. The S&P, and this I would say is maybe about, the chances of this are like 2 out of 3 that the S&P is going to continue down here. I think we're going to see a down move for the next week or so, or for this week anyway. And ironically, we think that the dollar will strengthen here a little bit. And that the yen is going to continue with its strength here. So be careful of this scenario, but it's getting a little choppy, as we say. I want to tell you about a stock that I purchased last week. I'm sorry I was not able to get to you on this. It's called Houghton Royalty Trust. GT is the symbol. It's a natural gas. It pays 6.8% dividends. Natural gas, when we purchased it last week, natural gas was at $2.45 for the October contract, October and November contract. The December contract was $3.79. Anyway, the stock went up $2.50 last week. And we're looking for an increase in that stock up a couple more bucks, as we think energy is going to become more and more viable, especially natural gas, because there's still a difference. That difference has dissipated to about 800 points, but from about what's that, 1,400 points. But there's still a play there. So be careful. All right, now here's some other things that we've got to discuss today. Very important. I don't know if you noticed, but the New York State pension cost is scheduled to rise 61% in the coming months. The state of Illinois is in big trouble, as are at least 9 other states, including California. New York is one of them, and I got to tell you, if New York goes, not from anything else, but I think it would be even worse than California. Why? Because New York doesn't have the character and the integrity that California has in its governance. Right? They're incompetent. These guys are not only incompetent, but they're peanut grinders. They're terrible. All right. Now, here's something on an international level, which is going to lead me up to something even bigger. China last month bought $50 billion in what they call SDRs, standing drawing rights, from the IMF, who couldn't get themselves arrested. What's bothersome about this is that Brazil, Russia, and India are doing the same thing. There seems to be more and more backroom maneuvering towards edging the dollar out. Right. And unfortunately, I think that is what's going to cause this great chaos that I've been talking about for the past 2.5 years that will be here very soon. Foreclosures over the weekend, the noticed that they're rising in the non-subprime areas. Okay, so that's a very bad sign. That's a further deterioration and weakening of the market there. And in addition to that, with that, banks are now ready to start unloading these assets, these mortgages, defaulted mortgages, and poorly structured vehicles, and foreclosures. The foreclosures that they took back, and these subprime and other non-performing mortgages are all going to be hitting the market, in my opinion, very, very soon. Very soon. And that's going to further hit the market hard. Now, here's something I want to tell you about. There emerged today, Monday, a pattern on the master pattern that may well indicate a very, very, very bad October. We haven't seen this before. This is something that just came up. We're struggling to try and identify this and to recognize what this pattern is, where it's coming from, where its basis and origin is, and we have not been able to do that. But I just want to warn you that this October, may well end up being a disaster. You know that earlier on, I think it was in June or July, we had made a prediction to watch out for, by virtue of this new program that we put into effect, that oil may hit $106 on October 20th. Now, although it certainly doesn't look anything like that right now, in the way natural gas is playing, people may be switching from oil to natural gas, but even so, we may have some problems. We're going to keep a close eye on that. You guys stay in touch. Hey, listen, I want to remind you, for those of you who love me, I'm doing a book signing at Barnes & Noble on Central Park Avenue in Yonkers this Sunday, September 20th. Cancel all your appointments. Bring your computers so you can watch the football games. That'll be from 6 until 8:30. I'll be doing some reading. I'll be signing some books and having some discussions. And I look forward to meeting as many of you as we can. Keep your head clear and your nose up and your powder dry. And we'll see you next week.